The evolution of Perp DEX products has been fascinating to watch. From GMX's early foray into a more user-friendly model with its volume-driven approach to the emergence of Hyperliquid, which further refines that approach. This 3.0 era is characterized by centralized exchanges stepping in and offering their own versions of these decentralized mechanisms. Is this the ultimate form? I think there's nuance here. Centralized exchange models have proven successful at handling the sheer volume required for a decentralized alternative to work effectively, especially as user base grows. But does that mean it's the best? Not necessarily. The evolution of Perp DEX is likely to continue in ways we can't predict yet. We might see even more innovation from traditional exchanges, or perhaps the rise of entirely new models, ones that address challenges currently facing decentralized platforms. For me, the focus should be on identifying and understanding those specific problems within DeFi, and even the broader crypto ecosystem. Is it about minimizing risk? Is it about making transactions faster and more affordable? The key lies in addressing these problems head-on, rather than getting caught up in hype cycles. The evolution of Perp DEX products has been fascinating to watch. From GMX's early foray into a more user-friendly model with its volume-driven approach to the emergence of Hyperliquid, which further refined that concept and pushed the boundaries of what was possible in terms of order book depth and liquidity provision, it's clear innovation is happening. Now, let's shift our focus to Solana and Avalanche. You mentioned infrastructure capabilities as a key factor. These platforms are certainly strong contenders with similar core technologies, fast transactions, low fees, scalable solutions for DeFi applications. The question then becomes how Hyperliquid built its own unique competitive advantage and market share, while others haven't achieved the same level of success. Here's my take on it. It's not just about infrastructure, it's a complex interplay of factors that contribute to growth in decentralized finance. User experience is paramount, for example. Hyperliquid focused heavily on building a smooth and intuitive platform. This was key to attracting users who were tired of clunky, complicated alternatives. But the market is still evolving. Solana and Avalanche have their own strengths and user base. They might not yet dominate the same way as Hyperliquid because they are still working through the initial development stages. The challenge for them lies in identifying the specific use cases that will truly leverage their core capabilities, then building a community around those solutions, just like Hyperliquid did with its unique approach to Perp DEXs. There's always room for innovation. We need to keep an eye on how these other ecosystems evolve and adapt their strategies to compete effectively in this space. Will they find the right balance between speed, cost, and ease of use? Time will tell, but it's exciting to see where things go from here. The DEX competition in 2025 is fascinating to witness, especially with the shifts from GMX's volume-driven model to Hyperliquid's more sophisticated approach. This evolution points towards a focus on long-term sustainability and recursion for these platforms. Looking beyond pure performance, I believe projects that can build robust infrastructure will have an edge. Think of it like this: decentralized exchanges need reliable backbones, like stablecoins or robust cross-chain swaps, to survive the volatility inherent to crypto markets. While some might argue about which business model is more sustainable, I think the focus on user experience and long-term growth strategies will ultimately shape the DEX landscape. Projects that offer a smooth onboarding experience for users, integrate with existing DeFi ecosystems, and build unique value propositions have greater potential in this highly dynamic space. Feature differentiation should be evaluated based on their impact within specific use cases. Scalability and liquidity. How well does it handle large volumes and facilitate seamless trading? Security and trustlessness. Does the platform demonstrate robust security measures and adherence to decentralized principles? User experience. How intuitive, user-friendly, and easy to understand is the interface for common DeFi actions like swaps, lending, or borrowing? We'll see which models truly stand out. The ones focusing on long-term sustainability will likely thrive in this competitive environment. Remember, building a resilient DEX ecosystem that can weather market volatility is key. The impact of Indian tax policies on centralized exchanges has been a significant force in driving innovation toward DEXs. This squeeze creates a unique pressure point for these platforms. They're not just competing for market share but also testing their ability to adapt and innovate. This situation highlights the need for more than simply user-friendly interfaces. It demands product-market fit, PMF, that can handle complex regulatory landscapes. DEXs are forced into a position where they become the new norm, but there's still room for innovation in this space. Here's what I think is needed. Compliance and customization. DEX platforms need to be built with compliance as a core component. They should offer options for customizing operations based on local regulations and tax structures. Think of it like a toolkit, where users can choose the level of complexity depending on their needs, e.g., simplified KYC or advanced features. Multi-jurisdictional platforms, DEXs that cater to multiple markets with diverse regulatory frameworks will be most successful in this dynamic environment. This could involve working directly with local regulators or even creating a universal standard for DEX operations, something akin to open source but focused on compliance and security. Innovation beyond trading. The current focus is heavily on trading volume. But this isn't enough. We need innovative solutions that address the broader needs of users in these markets. This could include providing financial literacy tools tailored to specific regions. Developing educational resources on crypto regulations and tax implications. This squeezed position is forcing innovation that moves beyond just making a platform more user-friendly. It's about adapting to these regulatory pressures to ultimately create solutions that are useful in diverse markets. But it won't be easy. Achieving PMF requires not only technical prowess but also understanding the nuances of local regulations and cultural contexts. The Perp DEX landscape in 2025 is interesting. GMX's dominance has definitely shifted, and we need to look beyond just volume for a sustainable future. I think the real innovation lies in how they address those pain points, things like transaction speed and cost, but also the user experience itself. I see potential in Perp DEX by focusing on decentralized order matching. This could be enhanced with techniques like multi-party computation, MPC, for faster and more secure matching, reducing latency and reliance on centralized intermediaries. Incentivizing liquidity provision. Instead of relying solely on price competition, Perp DEX can incentivize users to contribute liquidity by offering rewards based on factors like transaction volume or user engagement. This could be done through a tokenized reward system that integrates with the Perp protocol itself. Here's where I see opportunities for deeper investigation in 2025. Hybrid models. What if Perp DEX incorporates elements of traditional exchanges while still maintaining the decentralization aspect? Think about how to build a bridge between these two worlds, leveraging each system's strengths. For example, could we incorporate off-chain mechanisms like atomic swaps for high-speed trades and then settle them on the blockchain using secure escrow services? Privacy-enhancing technologies. We need to look at privacy in DEXs beyond just individual wallets. Think about tokenized KYC, know your customer, solutions that offer anonymity while maintaining regulatory compliance. This would be a major leap in user trust and adoption. It's still early, But I believe these are the kinds of innovations that will ultimately lead to greater success for Perp DEX in 2025. We're just starting down this road. Let me know what other areas you find interesting. You raise a valid point. Simply replicating generic blueprints won't lead to innovation in an ecosystem as diverse and dynamic as cryptocurrency exchanges. Competition will be fierce, leading to a scenario where mere homogeneity becomes the norm. But your challenge isn't just about competition, it's about recognizing the complexities of market dynamics. While I acknowledge existing exchange models often lack distinct identities, that doesn't automatically translate to stagnation. Instead, consider, how can we explore innovative avenues for decentralized exchanges? This is not about copying centralized models, but rather building alternatives from scratch using concepts like community-driven governance and tokenization. Something the document touches upon with Subsocial's decentralized social network functionality as an example. For instance, imagine a DEX that integrates a platform where users contribute their skills to offer custom trading options or even build communities based on specific interests. The potential is enormous because it shifts away from simply exchanging assets and instead empowers users to take control of their own financial journeys within these decentralized structures. This kind of innovation can't be achieved by simply copying existing models. A new direction needs exploration, and that's the challenge for you in 2025. Let me know if you want to dive deeper into specific aspects of this or explore alternative hypothetical exchanges. You've hit on a really interesting point about how product forms are evolving in DeFi. Predictive information markets, think of them like early versions of decentralized hedge funds, could indeed offer new opportunities for generating PMF with Perp DEX. Especially when combined with products offering non-USD RWA from non-European/American regions. Here's why I think that combination has potential. It takes the existing strengths of both, a focus on real-world asset value and decentralized, community-driven governance, and blends them in innovative ways. We're seeing an explosion of interest in ICE as it addresses regulatory limitations and brings financial access to previously underserved communities. However, we'll need more than just theoretical insights for this combination to truly work. It needs a strong user base and robust infrastructure that can withstand real-world volatility in the crypto space. Building trust is critical here. Let's dive deeper into these product designs and explore some wilder ideas. It's about pushing boundaries here. First up, predictive information markets. This is where things get truly interesting. Imagine a platform like Polymarket but powered by decentralized prediction markets built on Layer 2 networks like zk-Sync or Optimism. It could be completely permissionless and offer users diverse, customizable contracts for predictions on anything from project launches to even macroeconomic factors. Think of it as a prediction engine that can analyze vast amounts of data across multiple blockchain ecosystems. Next, the Internet Capital Money, ICE, model. This is about creating an entirely new form of capital flowing through DeFi and Web3. Imagine ICE built on Layer 2 networks where users can trade and deposit their crypto assets into a decentralized money market, with dynamic interest rates based on real-time liquidity conditions determined by smart contracts, similar to how algorithmic trading works in traditional finance. It's about building a true global money pool that fuels innovation and connects various financial systems through secure and transparent channels. Finally, RWA from non-European/American regions/non-USD assets. This is where things get truly exciting. Imagine a DeFi ecosystem that enables the direct access of liquidity for emerging markets by allowing users to easily buy, sell, or lend on global asset classes in their own local currencies. This would be enabled through custom decentralized financial instruments like RWA tokens pegged to these assets and traded on platforms with unique governance structures based on community voting. It's about democratizing access to capital and building an ecosystem that fosters global economic growth while promoting transparency and trust within the DeFi space. The challenge is immense, but it could be revolutionary. We need to move past just replicating existing models. These concepts hold the potential for truly disruptive innovation in the crypto space if we dare to explore them further.